Good morning, good afternoon, good evening. Welcome back to the channel where we talk about economics and crypto and lots of other fun things. Before we dive on into this, a free way you can support this channel is to hit the subscribe button, turn on the notification button, smash up that like button, and leave a comment in the comment section, all for the algorithm. But otherwise, let's go ahead and dive on in. The first thing I want to say is sorry, it's been a few days since I last made a video. It was just, I was mentally exhausted. I needed a break, and I'm making this on Monday, September 9th. I am back into the swing of things, although I have a busy weekend ahead of me. So we'll see, but there will be more videos this week, and thank you for bearing with me on that. Looking at Bitcoin, so there are some things that I want to talk about in terms of recent price action, and just I want to point out some similarities. And the first thing I want to point out is thinking back to August 5th, that big liquidation wick down to under $50,000. If you remember August 2nd was the day of the unemployment report, and we had an unexpectedly high unemployment report, and that started a bit of a cascade for prices to go down and to go down over the weekend. And then Monday was a moment of peak fear. Now, what we had in August was also around the time that the Bank of Japan raised rates by 25 basis points, and that set off pandemonium. And so it was a combination of this really bad unemployment report and really bad revisions of over 800,000 jobs being removed from certain reports as they got more data. And then this cascade of liquidations with the Bank of Japan news, and we saw the VIX get up to a level that it hasn't been at since COVID, and then before then wasn't at since the Great Financial Crisis. And we saw Bitcoin go down. It was really scary, and then it recovered, and we bounced back. And I am still calling for somewhat of a V-shaped recovery, well, very much a V-shaped recovery, in that I don't think we're going to end up sweeping those liquidation lows, not anytime soon at least. And so what happened on Friday? We had a terrible week with Bitcoin last week. It was the first week of September. September is historically a bad month. You've seen my content talking about September, that it's historically a bad month. We saw a 9%, more than a 9% drop in the price of Bitcoin from the opening of September to its bottom, a little under $53,000 last Friday. And what happened last Friday? Well, last Friday, we had a good-ish unemployment report. We did meet expectations. We did not beat expectations, and I mean beat in a bad way. We had a good unemployment report, and but as the day progressed, we started seeing more and more things that made the unemployment report not look as good. For example, we lost in the United States 5 figures, I think around 50,000 full-time jobs, and we added over 100,000 part-time jobs. And so what does that look like? That looks like a net gain in the number of jobs, but that's obviously not a good sign that we would lose full-time jobs and gain part-time jobs. We saw a loss in full-time jobs from American citizens, and a gain in full-time jobs from those who are not American citizens, excuse me. So what does that communicate? That communicates, and I hope this isn't interpreted as racism, but those coming from other countries are more likely to work lower paying jobs than those who are born in the United States. And then we saw several different revisions from previous reports, and all the revisions have been down. Revisions that we've received more data, and the unemployment is revised down. And so that created a level of fear in the markets that was not on par with August 5th, but was a new low. And we do have a new wick. And the question again is, do we revisit these wicks, or was this the bottom? And I'm curious. I mean, we have this massive wrench thrown in with the rate cuts potentially coming on September 18th. That's 8 days from now. So rate cuts are going to throw a huge wrench into this. If it wasn't for the rate cuts, I would say that I believe September 5th was the bottom for this month. And all right, that almost 10% drop. That was it. Now we're probably, in my opinion, still going to close the month lower than where we opened it, as is what happens most September, and then October would be a bullish month. But the rate cuts is just a massive wrench. I really don't know which way we're going to go. Could go up, could go down. I get sometimes trolling comments from people. Oh, so what you're saying is it could go up, could go down. Yeah, September 18th. Because listen, this doesn't happen. This is like a twice in a decade, once in a decade really phenomenon. The last time we saw a rate cut after a hiking and pausing cycle was 2019, and the time before that was 2007. This is a once or twice in a decade kind of thing. Now, if it wasn't for the rate cuts and what's going to come following that, and what's going to come being a really significantly unpredictable moment, I would say, yeah, the bottom's in. And why would I say that? Well, a couple of things. Everything I just shared about unemployment is true. That the unemployment report the last couple of months has been a moment of peak fear, and then we've recovered. And then the other thing that I would say is I'm not going to share this chart in this video, but if you were to look up a chart for Bitcoin miners, what you would see is it is the entirety of 2024 up until just a week ago, Bitcoin miners have been net negative. They have been selling their positions. They've been mining, they've been selling, and now, finally, after all this time, Bitcoin miners are net positive. I mean, you think about 450 Bitcoin mined per day. Most of that, and sometimes even a surplus of that, was going into the system. And what kind of pressure does that cause on the price? That's going to cause some pressure on the price, and maybe even a significant amount of pressure on the price. We have seen a sell-off with the spot Bitcoin ETFs over the last couple of weeks in the 8 to 9 figure range every day. And I do think that we're nearing an end of that, as same deal what happened in August. There was significant buying from the spot Bitcoin ETFs after that moment of peak fear in August. I'm expecting something similar to happen again, where we're going to see buying picking up again with the spot Bitcoin ETFs. So you have miners net positive, you have the spot Bitcoin ETFs, I believe, turning net positive, and we have Bitcoin at a discount. We have it at its lowest point potentially of the month. And I would say, aside from the rate cuts, that 52,000 and change would have been the bottom. Now we'll see what happens, because it's entirely possible. I'm hearing people calling for Bitcoin to go to the upper 60s. I heard in my live stream somebody calling for Bitcoin to be $72,000 on the day of the rate cut. And if that happens, where do we go from there? Well, I think that would be a buy the rumor, sell the news event. So how far do we dip after that? I don't think Bitcoin's going anywhere near $72,000 on the day of the rate cut. That's 8 days from now. So, I mean, is it possible for Bitcoin to climb $17,000 or whatever it is in a span of 8 days? Sure. But it is very unlikely, especially given that it's the month of September. So we'll see about that. If we do see a big run-up, I'm probably going to take some money off the table. If we don't see a big run-up, I really am not expecting that the rate cuts would be anything significant. I mean, there is the question again of there's multiple questions. What's the Bank of Japan going to do at their next meeting? That's after the Federal Reserve meeting. Will they lower back down to zero? What's the Federal Reserve going to do? Are they going to lower 25 basis points or 50 basis points? And then will they put an end to their quantitative tightening, which is something that I don't hear anyone talking about, but is very much on my radar. And my preference would be a 25 basis point rate cut. And right now, according to CME futures, that's a 3 in 4 chance that it's going to be a 25 basis point rate cut. And that's what the market's priced in. But they're not pricing in a 50 basis point rate cut, and they're not pricing in the possibility that the Fed would end their quantitative tightening to the tune of $25 billion a month. If my preference would be 25 and an end of quantitative tightening. And I say my preference, meaning my short-term preference. My long-term preference is just let's get the pain out of the way and keep rates high and elevated and cleanse the system of a great deal of leverage. But if we're talking about our short-term bags, that would be my preference, 25 basis points and an end to quantitative tightening. But we'll see. It's going to be an interesting next week and a half. But anyway, that is all I have for today. I hope you have a wonderful day, a wonderful rest of your week, and I will most certainly be seeing you in another video. Peace.